How Bitcoin reached $90,000. Predicting Bitcoin reaching $90,000 involves exploring factors that could drive such a surge in value. Although speculative, the reasoning often rests on analyzing market dynamics, adoption trends, macroeconomic conditions, technological advancements, and external influences. Market dynamics and supply constraints. Limited supply. Bitcoin's capped supply of 21 million coins plays a central role in its valuation. As of now, approximately 19.5 million Bitcoins have been mined, leaving only a small fraction yet to be introduced into circulation. With a predictable issuance schedule, halving every 4 years, the rate of new Bitcoin entering the market continues to decline. The scarcity effect, compounded by increasing demand, creates upward pressure on price over time. Halving events. Bitcoin's halving events reduce the mining reward by 50%, decreasing the rate of new supply. Historically, these events have preceded significant price rallies. 2012 halving. Bitcoin rose from $12 to over $1,000 in the following year. 2016 halving. Bitcoin increased from $650 to nearly $20,000 by 2017. 2020 halving. Bitcoin climbed from $8,000 to over $60,000 within 18 months. The next halving, expected in 2024, could tighten supply further and push Bitcoin toward higher valuations, potentially breaching $90,000. Institutional investment, institutional adoption has accelerated Bitcoin's price growth in recent years. Large financial entities like MicroStrategy, Tesla, and PayPal have embraced Bitcoin, either as a balance sheet asset or as part of their payment ecosystems. If more institutions, pension funds, and sovereign wealth funds allocate even a small percentage of their portfolios to Bitcoin, the influx of capital could drive prices toward $90,000 or beyond. Rising adoption and use cases. Broader retail and corporate adoption. Bitcoin's utility as a medium of exchange and a store of value continues to expand. Payment systems, platforms like Square, PayPal, and Stripe support Bitcoin payments, increasing mainstream accessibility. E-commerce integration, as businesses like Overstock, Microsoft, and others accept Bitcoin, its use in everyday transactions grows. Remittances. Bitcoin facilitates low-cost, borderless transactions, making it attractive for international money transfers. Nation-state adoption. Countries like El Salvador have adopted Bitcoin as legal tender, signaling a shift in how governments perceive cryptocurrencies. If more nations follow suit, either to hedge against currency instability or to attract foreign investment, demand could skyrocket. Financial products and ETFs. The approval of Bitcoin ETFs, exchange-traded funds, in several regions allows traditional investors to gain exposure to Bitcoin without holding the asset directly. This accessibility drives demand among institutional and retail investors. A spot Bitcoin ETF in the United States, for example, could act as a catalyst for prices reaching $90,000. Macroeconomic factors. Inflation. Hedge Bitcoin is often referred to as digital gold because of its perceived ability to act as a hedge against inflation. In times of economic uncertainty, fiat currencies tend to lose purchasing power due to central bank policies like quantitative easing. Bitcoin, with its finite supply, offers an alternative store of value. Global economic instability, geopolitical tensions, currency devaluations, and banking crises push investors toward decentralized assets. For instance, hyperinflation in emerging markets. Countries with unstable currencies may see increased Bitcoin adoption as citizens seek to protect their wealth. De-dollarization. If global reliance on the US dollar diminishes, Bitcoin might emerge as a neutral, borderless reserve asset. Institutional fear of missing out. As Bitcoin continues to gain mainstream legitimacy, institutional investors who have previously avoided it may feel compelled to enter the market, fearing they will miss out on substantial gains. This herd mentality could amplify demand and drive prices higher. Technological advancements and network effects. Lightning Network. Scaling solutions like the Lightning Network improve Bitcoin's transaction speed and cost effectiveness, making it more viable for everyday payments. Enhanced usability could attract more users and businesses, bolstering demand. Increased security and decentralization. Bitcoin's resilience against attacks and its continued decentralization strengthen investor confidence. As mining becomes more geographically distributed, the network's security increases, reducing fears of a 51% attack or centralization. Smart contracts and Layer 2 solutions. While Bitcoin is primarily a currency, innovations like stacks and rootstock bring smart contract functionality to its ecosystem. This expanded capability could position Bitcoin as a competitor to Ethereum, attracting developers and investors. Speculative mania and sentiment cycles. Market psychology. Bitcoin operates in cycles often characterized by speculative mania. Accumulation phase. Smart money and institutions quietly accumulate Bitcoin. Markup phase. Public interest grows, driving prices higher. Distribution phase. Early adopters sell at higher prices, causing temporary stagnation. Decline phase. A correction occurs before the cycle repeats. A speculative bull market driven by media hype, celebrity endorsements, and increasing accessibility could rapidly propel Bitcoin to $90,000. Social media and awareness. As Bitcoin gains more attention in traditional and social media, public curiosity and FOMO can amplify adoption rates. Viral narratives about Bitcoin's potential to replace gold or fiat currency often spark surges in demand. Potential challenges and risks. While Bitcoin reaching $90,000 is plausible, it faces significant hurdles. Regulatory scrutiny. Governments worldwide are grappling with how to regulate Bitcoin. Stricter rules or outright bans in major markets could dampen investor enthusiasm. Environmental concerns. Bitcoin mining's energy consumption has attracted criticism. Although renewable energy adoption among miners is increasing, negative perceptions could deter environmentally conscious investors. Competition. Rival cryptocurrencies with advanced features or lower transaction fees might divert investment away from Bitcoin. The path to $90,000. For Bitcoin to reach $90,000, a combination of factors must align. Halving catalysts. Post-halving scarcity drives supply-demand imbalance. Institutional capital, significant investments from institutional players. Adoption growth, broader acceptance by individuals, businesses, and nations. Favorable macroeconomic conditions, inflationary pressures and fiat currency devaluation. Technological progress, enhanced usability through scaling and innovation. Conclusion. Bitcoin reaching $90,000 represents more than a speculative price target. It signifies a maturation of the cryptocurrency market. The confluence of limited supply, rising demand, institutional adoption, and macroeconomic conditions creates a compelling narrative for such a price level. However, Bitcoin's inherent volatility and susceptibility to external shocks underscore the importance of cautious optimism. As Bitcoin evolves, it continues to challenge traditional financial paradigms, positioning itself as a cornerstone of the digital economy.